Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. One reason Bitcoin is so popular is that its base layer has a very long natural frequency. The frequency of the network is very important for how stable, safe, and successful it is. To put it another way, Bitcoin is that natural rhythm. I'll call that tactical network security because it's what keeps the network safe. Every day you have to go through that wall of digital power which you don't have because the network controls all the power. Please put any other crypto network on the same framework if you want to look at any rival network. Then ask how much real capital has been invested and how much real electricity is being used to run it. How much computing power it has and how many people own it. That picture of the Verrazano Narrows Bridge shows that it was built with a natural frequency that resonated with the wind. However, when the wind blew over the bridge, it shook apart because it resonated on the wrong frequency, and it literally destroyed the structure. If you want to be a good structural engineer, you need to ask yourself, am I building something that won't fall apart? So if you look at how the network changes over time, it has a very long natural frequency at its base layer, which is one reason it is winning. Michael Saylor gives an in-depth look at Bitcoin as a digital asset in this video. He talks about the Bitcoin network security design and what the future holds for Bitcoin. He talks about how the network is protected from scams and hacking by mining computers and electrical security. It is important to note that hacking the Bitcoin network is impossible. In the end, Saylor comes to the conclusion that the network stability is strong. He names 4 important factors that support Bitcoin's network and keep its value going up. Stay until the end of the video to hear Michael Saylor talk about these important pillars. Please like the video, subscribe to the channel, and turn on post alerts so you can see more videos like this as we bring them to you. Add your ideas, comments, and observations to the conversation by writing them in the box below. Everything you do is good for the YouTube system and helps the channel grow a lot. Thanks and have fun with the movie. We'll process blocks every 9 minutes 30 seconds or 9 minutes 40 seconds if the network is growing, even though transactions happen every 10 minutes. This is because you're always looking to grow. As the market shrinks, bear market will take a little longer to process blocks if you turn off hash power. But usually you'll be there in about 10 minutes, give or take a few minutes. If you stray too far from the 10-minute center, the difficulty change will kick in after 2 weeks and bring you back to it. That is an important part of the network's frequency, but it's probably not the most important thing that makes it work. What's more important are how the mining and tools work. The real question is how long it takes to open a Bitcoin mining center. Let's say I give you $100 million and you want to put it into Bitcoin. So it takes between 6 months and a year to get the tools and another year to plan and build the mine center. Putting it online will take about 2 or 3 years. The next question is, when will I get my money back? That will likely take another 2, 3, 4, or 5 years. When you're a miner, you're thinking about putting money into something and getting it back, usually in at least 4 years. It could last up to 10 years or 4 to 10 years. In other words, the miners naturally happen every 4 to 8 years. Additionally, this means that you won't just stop mining in a month, 2 months, or 4 months if you're not making money. It takes between 4 and 8 years to really see it through. 2 more things are going on. The miners are running digital power centers, and the digital power is SHA-256 hashing. In other words, if a miner goes bankrupt, the Bitcoin network fails very smoothly if it fails at all. A group of miners is running all of that hash power, the 500x hash. It's also the first thing to fail in hard times when the price of Bitcoin drops and transaction fees go down. The great thing about the power system is that it's one of a kind. And once you've turned $10 billion in interchangeable cash into $10 billion worth of Bitcoin mining rigs, it can't be changed back. The city can't be changed back. It's money that has already been spent. It can only be used to power the Bitcoin network. It also doesn't really matter if one Bitcoin miner wins or fails. That's why Bitcoin is so beautiful, it flows naturally. I'll call that tactical network security because it's what keeps the network safe. You need to get through that wall of digital power every day, but you don't have it. The network providers have all the power, not you. That's a defensive defense system for Bitcoin. There is strategic security and long-term security. By long-term security, I mean security for more than 100 years. The safety that stops Bitcoin from being banned or a government from seizing all the Bitcoin miners, etc., comes from a mix of political power, economic power, and electrical power. In other words, Bitcoin miners are sending electricity and processing power to the network. In other words, they're the body. But the political power comes from the hundreds of millions of people who own something related to Bitcoin. This could be MicroStrategy stock, a Bitcoin spot ETF, stock and block, or Coinbase, or even Bitcoin itself. All of these things make you a part of politics, and you'll use your political power to lobby. Afterward, Bitcoin is also really safe because it has economic power. That being said, I believe it is important to bring this up because it shows how smart Satoshi was. Satoshi came up with a great idea, and we had a smooth start. There was no pre-mine, and those 1 million Satoshi coins never moved. Right now, the only way to get Bitcoin is to spend a lot of money on mining equipment and energy, and money to build mine hubs, or you paid real money for it. We can figure out how much money has gone into mining in the past, but I think it's a good guess that between $20 billion and $40 billion has been spent on mining. Like, you can track billions of dollars of cash back to just a few companies like Marathon. A lot of money has been put into this network, so you can track it. In the end, the network's safety will depend on what people do as lawmakers and what capitalists do in the economy. Also, all the businesses have an effect. For example, app companies like Cash App or Coinbase have an effect, and so do miners. All of these companies have lawyers, CEOs, lobbyists, and other employees. They also pay taxes, so mayors, governors, senators, and other officials support them. This system is really cool. Put any other crypto network on the same framework as this one if you want to look at any rival network. Then ask yourself how much real capital was invested, how much real electricity is used, and how much digital power is behind it. Then how many people have it? When you move on to the next one, like Ethereum, you understand that it doesn't have any electricity or digital power behind it after the merge and the proof-of-stake conversion, right? 2 of the 4 legs were pretty much cut off 500 exahashes vs. Nothing and 15 gigawatts vs. De minimis nothing. After that, the next question is, how much economic power? So, if 70% of ETH had already been mined, name one person who would have meant to put $100 million into ETH. I have never heard of anyone. Like when I said I would put $175 million into Bitcoin, no one else is going to buy any crypto tokens for the next 5 million tokens, right? After Bitcoin, you can go to ETH and then to every other token. As far as I know, no one has ever admitted to putting $100 million, let alone $1 billion or even $5 billion into any of them. A few $billion is about how much real money I think has been put into Ethereum. That's $600 billion in Bitcoin different. If you say $6 billion, I think you might be on the high side. We are talking about a 100-fold difference. There is no way to get to a number bigger than a few billion. I believe that 99% of all the real money has been put into this one network. If all the money, energy, and digital power are in one network, then political power is the only thing left. And the truth is that a lot of people own crypto tokens, right? There are many people who own ETH. In reality, those networks are protected more by political power and the voice of the people than by Bitcoin's physical or economic power. There you have it, Michael Saylor's smart analysis of the integrity of the Bitcoin network and his comparison of the 4 pillars that back Bitcoin to Ethereum. Michael names these elements as political power, economic power, computing power, and electrical power.